listen-only mode.
Good afternoon. Thank you, Pete. Happy Thanksgiving to you and to everyone else. I hope you have an enjoyable week. Well, we've got about half the people on that signed up, but we'll go ahead and get started. A lot of those people will end up watching the video, which is fine. But this month I want to talk about where I'm going to go in the future with the newsletter. As you saw on the splice sheet or whatever that is that George puts out, I've done a monthly newsletter with Ian for a total of 17 years, and that's what's been amazing about HGSI is that there's been something to talk about for 17 years, 12 times a year, and a lot of those things were new techniques, but we're at the point now where we just need to use the tools, and I think this is a good approach, and I'm welcome or open to any feedback from any of you after you watch this presentation and to see what you think. Now I have some charts, two charts up here, and I also have a warehouse view, as you can see. Now I want to point out that if you go to the website and go to the add-ons, just reinstall the last update down here at the bottom. Download the zip file and update your add-on. And it's going to be the same month. It's or the same date, I should say, October 8th, 2016. And I just added a few charts, and those charts are designated as newsletter charts. Now these may change in the future, and I will let you know if there are any new ones, but what I'm using here are I didn't want to do that. I'll go to this one right here. I'm using 3 charts, and the first chart on the right hand side is a daily chart, and it's the primary chart that I've been using in my webinar series. It's what we call the impulse reaction chart. It says IR up here. What we're looking for are slight pullbacks in trends. It can be a one-day pullback or a two-day pullback, and whenever that happens, this green line is generated if the volume point of control down at the bottom is green. So you can see in this instance, this is a little stock called TrueCar. I was looking at this today as a potential trade. In fact, I had a buy stop order out, but it did not get filled, which is fine. But I just want to explain where I'm going with this and what my intentions are. Now, first of all, I didn't ask if you could hear me, but I assume you can. So if somebody would just say yes. Okay, good. Thank you. That's all I need. This is the way I'm setting this up, and there are several reasons for doing this. First of all, let me show you what I'm using to break up my screen. It's a little program for $19 called Max2, and you can download a 30-day trial if you want to, and then you can set up your screens any way you like to. Now I work off of 2 24-inch screens, and I know some of you go even larger. So if you have a 27-inch or 32-inch screen, you would probably like this very much. So download it, give it a try. It's only $19. And what it lets you do is size your windows in different configurations. And you can see that the daily chart here is slightly smaller than the weekly chart. And the reason I did that is I wanted to get this information in on the charts, and one of the charts anyway, and if they were equally divided, that information would not show up. So I wanted the longer term perspective of the weekly chart compared to the daily chart. So that information is over here on the weekly chart. Now there are two weekly charts. One of them has the 3, 6, and 18 period exponential moving average. The other one has the 18, 50, 100, and 200 exponential moving average. This is an IPO. That's why you only see 3 exponential moving averages on here. Those moving averages on both charts are to give us a sense of trend direction. Now this chart over here has the 3, the 6, and the 18, shorter term for entries, for quicker entries, and also as a method to help keep you in the trade. For example, in my webinar series, I pointed out that with this chart, the 3 over the 6 can be an excellent way to both get you into a trade and also to keep you in a trade. The 3 is essentially price. It's 3 days rather than 1 day, but since it's an EMA, it's more responsive. So on this chart, this is the 3, 6, and 18. Here is your group index. You have the volume point of control, 10, 10 down here, which is green, which is my trigger. Don't always catch them on the trigger, but if it's green, that means that currently the bulls are in control based upon those factors, 10 days and 10 buckets. And of course, the down here at the bottom, we have the volume. I widened or thickened the volume bars a little bit on both of these so they show up better. And then over here, I have the 10-10 on the weekly chart, along with the group also on the weekly group. Now this 10-10 is based upon 10 weeks and 10 buckets in those 10 weeks, whereas this is a daily 10-10 over here. So this gives us a longer term perspective. Now down here is, of course, my warehouse view, and I will be using various methods to prospect. Currently what I have up here and what I'm going to go with for a while are growth stocks. Now I'll bring this up here, and when you already have this in folder 2016-1008, and it's folder number 4. Now what I did do is I altered the filter to include stocks $1 and over, $1 and over, trading only 100,000 shares. The reason I did that is I've had some trades on. Excuse me a second, I was losing my voice and I had a mint in there, or a lozenge I had to get rid of. Anyway, I had a few trades on this week that traded less than 250,000, and they were really good trades. So I just decided to lower that to $1 and 100,000. And when you do your add-on update, that will be fixed for you automatically or changed for you. If that's too low, you know, you can bump it up, but whenever you do update this add-on, it's going to be overwritten. But like I said, I had some good trade. Well, let me just show you quickly here. These are the trades that I currently have on. And this is only 1 week, by the way. I put the first trade on a week ago Friday, and I'm not trading big numbers here at all. This stock, which I got stopped out of today for a $514 profit, only 175 shares, but this is trading, I believe, around 140,000 shares is all. This one right here is also, I believe, one of these two is also in that range. So there are some really good trades on low volume stocks, and if you find stocks that are trending nicely and they're low volume, that generally means that when the demand is overpowering the supply, every time they dip down a little bit. Well, not every time, but often. When they dip down a little bit, the buyers will step up. So I do not want to eliminate stocks like that. So that's why I lowered the number. Now looking at this under the VPOC, these are all growth stocks, and this is where I'm going to begin sending out. I think a lot of people, well, I know a lot of people are interested in growth. Now one thing about the growth calculations in HGSI, even if the actual numbers are negative, but they're improving, that's considered a growth stock. Now let's look at the filter. And it's really a pretty basic filter, but there are two requirements which make this filter are the EPS change greater than or equal to 20 and the previous compared to 1 year ago. Greater than 0 on the institutions, just some institutional sponsorship. I kept that really loose, as you can see, and then a high ERG rank greater than 0 makes sure that they're assigned to a group. Now every other filter that is in here has those requirements, but there are some other requirements also, like the first one requires that the VPOC, or the volume point of control, 1010 be positive, and also a positive force index. Now if you look down here, you can see that that's a lot of stocks. I mean, there's 319 stocks in here. And if I just go to the VPOC positive, it goes up a few more, 327, which shows us how strong this market is. There are, well, let's go down here to the growth stocks. So there's 516 growth stocks in total. And out of those, 320 of them, 27 of them have a positive VPOC. What am I, hi Ivan, what am I using to track? It's called a TJ, let me bring it up again quickly. It's TJS Elite, just do a search for that. And it's a really nice spreadsheet. You have to enter it manually unless you use NinjaTrader, but it really keeps you on track for what you're doing. You can't hide any trades and say, oh, that's just a bad trade, I'll forget about it. It's all here in front of you in black and white. What I do is I put the closing prices in every day under the exit price. If there's a date behind it, that means that I'm out of the trade. Okay, but I think it's $129 for everything, but if you just want stocks, it's less expensive than that. Sure, it's well worth it. A lot of people have been buying it. Okay, so getting back to this, here is the approach I'm going to take. I want to really put a lot of emphasis on the weekly charts and maybe even the monthly charts too. That's something that I think most people don't do, and I've been guilty of that in the past, just paying too much attention to the daily chart. And the daily charts are great for looking for entries, and all of our screening and all of our signals are generated on the daily chart. So we have to, of course, pay attention to the daily chart, but to get a longer-term perspective, look how much different. I'll put these on the same zoom ratio. There's a 2, and there's a 2. Look how much different the weekly chart looks than the daily chart. Now let me go back on this one. Oops, wrong one. And the reason, the primary reason for doing this is I want to start talking about the stages in a stock's life. Now, this information is from, well, I guess I read about it first in Stan Weinstein's book, Profiting from Bull and Bear Markets. That book was out 25 years ago, I think. In fact, I don't even have it anymore. But Mark Minerva, I believe is how you pronounce his name. It's in his book too, and this book I have open right here. It's called How to Achieve Super Performance in Stocks in Any Market. He essentially got this from Stan Weinstein, but it's, a lot of people use this. Everything in the technical analysis or chart analysis business, ever since Jesse Livermore and Wyckoff and that group of traders, Dow, everything is built upon or borrowed going back 100 years. So there's really not a lot new, but this is important information to get a longer-term perspective on what a stock does. So here are his 4 stages in the book: neglect or consolidation, advancing, accumulation, topping, distribution, and then capitulation on the hard sell-off. So what I plan to do is I plan to, let me just bring, I got so many windows here. I am going to distribute 1988. Thanks, Scott. Well, I said 25 years. That wasn't a bad guess, was it? I am going to capture this information, which I typed out, and in Snagit, I'm just going to overlay it on every one of the stocks that I put up there on the OneNote. Now, rather than writing a newsletter and sending it out in PDF, which I just do not want to do it anymore because I think this will be much more beneficial. I am going to post my screen capture. I'll put some comments on it, and then I am going to try to do like a 2-minute video of every trade that I put up there, and this is just a sample. You'll click on this right here, and I'll explain what I'm looking at and why I like it. And it is not going to be necessarily a recommendation. I can't make recommendations. I'm not a certified financial planner, and I'll have to put a disclaimer on this. I am just going to show you what I am looking at. And then I want you to start doing this yourself. You benefit from it a lot more if you do it yourself anyway. Now down here at the bottom, I'm going to set up, this is from a spreadsheet that my webinar attendees get. I am going to include one of these in each one, and if certain conditions are met, I will be stopped into a trade. I never buy a trade or a stock outright anymore. I just put a buy stop or a buy stop limit in. If I get stopped into it, great, I'm in the trade. Now today I made a mistake and I put a limit order in rather than a stop limit order, but I got filled, and it's a profitable trade. So, I made a mistake, but generally I do not. But this information right here is for position sizing. Yeah, all the people in the webinar are using it, the ones that are trading anyway, and it's just a tremendous way to control your capital risk. And these are, this is your risk on the trade if you buy the full number of shares. In this instance, I was going to buy 300, so my risk would have been 225. It gives me my stop. It gives me the amount of money I'm risking. So everything's right here. What this does is, for me anyway, and I think several other people that are doing it, it really takes a lot of the stress out of trading because you know exactly where you are when you get into a trade. So this stock did not get filled today. Let's just bring it up here. Well, I've got it right here on my screen. This is the one I'm talking about. You can see that let me draw a horizontal line here. I had it set up, if it took out that high, and this stock is, yeah, it's a little extended, but what do I like about it? I like the group going up, and I like the fact that this line was generated and there was a test for supply. So as you can see, I'm bringing VPA into the equation, but I don't want to buy this stock unless it proves to me that it can take that out. Now another thing here, this right here, this hammer or a pivot, it's actually a pivot. Why? Because this low is lower than this low, and it's also lower than this low right here. So for this to be a valid pivot, though, it has to take out this level. And that's why I put that in there. You know, I may set it up again tomorrow, and if it gets filled, great. I'm going to see what the group did today. But every stock that I feature, I'm going to put one of these, or I'm going to indicate which phase it's in. Now, this stock here, let's just take a look at it. What was this here? This was declining. This was capitulation here. When it got up here, you can see this was topping, double top here. Couldn't make it through, and then it rolled over. Really, when it took out that low down here, then it broke down completely. But you can see using the 3 and 6 moving averages that it went below that here on this weekly chart. Now on the daily chart, let's take a look at it on the daily chart. Well, right in here, I think that's, well, let me go back and check those dates. I want to make sure. No, that goes clear back to 115. So let's see if I can do this. It's clear back here, boy. Look at that thing sell off. Okay, it's clear back up here. So initially, here's the 3 crossing the 6 right here. The group is breaking down. Then we got a rally somewhat because why? Because the group was going up, but it didn't hold, and then it rolled over, and this thing really took a dive. And I didn't realize it was that bad. You get 2 totally different perspectives on the daily and the weekly chart, though. But I'm using the daily primarily for entries and VPA signals, VPA flags, VPOC flags, and so on. Okay, so that's the way I'm going to distribute this information. I don't know how many I'll put out in a month, but I thought by doing it on OneNote, we would have all of the trades in one place. If I send out PDFs, by the way, I didn't like the way the PDFs looked at all, taking the screenshot and reducing it down to 8.5 by 11. It just doesn't look good. This is extremely clear. Now, those of you who are on a tablet, you know, you may have some issues looking at this, but you can scroll over. I'm going to try it. If it doesn't work, I'm going to do something else, okay? So this is what my plans are to do, and like I said, though, I am flexible. If it doesn't work out, I'll do something else. But the point is, we want to start using HGSI the way it's meant to be used, and start bringing all these tools together. Now, this is from last night. I have not updated today. And this is the growth stocks VPOC 1010 positive. In other words, the volume point of control is positive, and these are growth stocks, and there are 327 of them. Now, if you've been following along, and if you take the morning report and so on, you know that banks have been dominant now for several days, with the thought, or the conclusion, I should say, that Graham Dodd's going to be either watered down or eliminated, so banks are going to be able to do all their great things again. So banks have been on a run. But with the intraday HGSI, I immediately knew today that banks as a group were not following through. These banks are all growth groups, but if you look over here at this column, you can see that they are getting a little bit tired. Now, marine shipping has been crazy, and look at these two today, down 5.6%, 5.66% and 6.10%. So if you use the intraday, you can run your screen or apply your screen, and then you can see if these groups are following through the next day. Now, no, Ivan, I'm talking about the Insider Club. They're two different things. Well, Bob, you can sign up for the Insider Club, but you know, you really need to have the software. Everybody needs to have. I assume you do. And then you'll really get a lot of use out of this. Let's look at a few more stocks here. First of all, I want to point out some other things. I am using a multiple sort on here, and I'm going to post the sorts for you when I put a stock up. I am using the raw combo on this one. This is another great feature of HGSI that probably is not utilized very much. My raw combo sorts on the industry group, which is this column right here. The next sort is on the days since the last VPA signal. And okay, so let me find, let's look at the banks here. Okay, this would be a, I'll go over here, and it says that there was a VPA flag yesterday or today. This is the data from last night. So when I ran this last night, it tells me there was a test for supply today. So these three sorts give me the industry group, which was up the most yesterday, and then I'm looking to see if these groups are following through. I want to know the day since the last VPA signal, and then I want the last VPA signal description. So you can see yesterday there were 3 banks in a row which crossed over, and they all had efforts to rise. So what this multiple sort does is it allows us to group according to these criteria. I always like to know what the groups are doing, and then I want to see if they're following through. Yeah, I'm sorry, Payush, yes, if you, those of you who are doing the webinar, you can also update the add-on, because I included those charts in the webinar files. So then you'll have the same charts that I do. Okay, so going forward with this, I can immediately look down here and look at this column here. This is yesterday, of course, and this is where the strength was yesterday, exploration and production. By the way, if you look over here at the exploration and production, other than this stock here, which must have been news related, look at these stocks in this group. They were all up today. So I immediately knew that, but the problem with a lot of these stocks is that they gapped up today, and if you'd have chased that gap on these, you'd be in a losing trade right now. So you have to be careful about that. By the way, when I put buy stop limits in, or limit stops, that's why I'll use the stop limit rather than just a stop, because I don't want to get stopped into a stock like this and potentially be in a losing position by the time the the day ends. So you have to be careful if you're using your orders, and you certainly don't want to put market orders in. There's no reason to put a market order in ever, in my opinion, unless you just absolutely have to get into a stock, or your stops, of course, are market orders. They become market orders automatically. Okay, now let's look at this stock right here, and you can see that it has been moving up in the short term. Why? Because oil is moving up. By the way, oil was up another 4% today on hopes that there will be an OPEC freeze on output, or at least a slowing down. So that's why these stocks jumped. I mentioned that in the report this morning too. I mean, it's just common sense that if oil's up, these stocks are going to be up. So if you're going to be looking at oil exploration and production stocks, why not be in the stocks that are showing growth? So that's why I like, in this instance, to screen for growth stocks. Now this stock, let's look up here at the top. I'm going to frame some of these numbers. Sanchez Energy has been losing money, but these numbers are a lot better than these numbers over here. Or did I get those right? Yeah, 6. So that's why this is considered a growth stock at this point, where we have accelerating earnings. Now, what stage would you consider this one to be in? Looking at this, it looks like it's really starting to move up. And for, a short-term trade, yeah, it may be, but if you look at the longer-term perspective, let's look at these moving averages over here. I mean, they're all pretty much stacked on top of each other, aren't they? And this stock really has not formed, the way I look at it, has not formed a higher low and a higher high. It went up here, but that new higher high will not be established until it gets up here to this line. So this stock is really in the do nothing stage, or could be early accumulation. But this is why I am going to be using weekly charts in addition to daily charts. I just think it gives, well, I know it gives us a totally different perspective. Sure, it's all right to jump on these trades when the group's moving up, but this is not a long-term growth stock at this point. It could, sure, it could go up here. It could take this out, form a higher high and higher low, and then really get into phase 2, or the accumulation phase, but it certainly isn't there yet. Pete says he likes the volume shakeout last year. I assume you're talking about this over here, Pete. Okay, now here's something else. Let's just close this up right here. And what I've done is I am not showing the VPA flags on the weekly, but they're in here. So all you have to do is right mouse click on the window, the price window, edit the indicator, go to VPA volume price analysis, display VPA analysis in the upper corner of the chart window, and draw the VPA flags. And now we have VPA flags both on the daily and the weekly. And the VPA flags on the weekly are based upon the weekly price action, not upon the daily price action. So now, after today, this is the second, well, actually, there have been 4 bullish VPA flags here over the past week and a half or so. So today is an up bar closing near its high. That confirms the return of strength after yesterday's, or last week's, I'm sorry, not yesterday's, strength seen returning after a downtrend. So this is only today, but it is generating this on the weekly bar anyway. So if you like to have the VPA flags on your weekly chart, it's just a matter of turning them on or off. Initially, I probably will not put these charts out with the weekly VPA on there. That'll be up to you. But it's always nice to be able to turn them on and off. Okay, like I said, here's the weekly VPOC 1010. Notice that this is still under the blue line. This kind of confirms what I'm looking at up here. This stock is really not in accumulation mode. Now back here, it looked like it was going to be, and if I put my crosshair on here, it moved up, pulled back, formed a higher low, but it could not form that higher high beyond this point. So it never did go into an uptrend. Okay, does that make sense, I hope? So this is what we're going to be looking at in the future. We're going to take all this information into account, and I am going to try to get the best looking stocks out there that are setting up, and the groups are moving and everything else. I'm going to concentrate on the long side now, but we can use this same process over here with the risk control with short side too. Right now everything's pretty bullish, so there's really no need to go against the trend. Now let me look at my notes here and see what else I want to discuss. Okay, well, I've already made this point. I'm going to be using VPA, VPOC, EMA, support and resistance. That's what I'm really doing right now. And then I'm going to classify these stocks as in their 4 different phases. Kerry, are you on? Okay, maybe he's not. Now let's look at some other stuff. Let's see if we can find some other phases here. Here's a little stock that has been a beautiful stock. Okay, did the earnings come out on WB? I'm asking Kerry, he's been following that stock. Anyway, this is a stock that went from, okay, did the stock go up? Down. Okay, glad you didn't buy it. This is a stock that does not trade much volume. As you can see, it's above the 250, but it's not much above it. And it went from really distribution. You can see that. It double bottomed here. It went up. It formed a higher high at this point. Didn't get that in the right spot. Came down, higher low, formed a higher high here, higher low. Then it went over here, and then it kind of broke down a little bit. But then you can see that it regained this and took that high out right here. And most importantly, well, this is a weekly chart. Let's look at the daily chart. It is following this fan. These fans I've really gotten hooked on because they show the strength of a stock. And here we'll do it on a weekly basis. Let me change to daily. I'll just hit my alternate D key and notice how the fans went into position back here, and then you can see how it spread apart, and it stayed in a long-term trend ever since. When these fans are stocked, or the EMAs are stacked according to the right order, that is a long-term trend, and look what this stock has done. little stock that trades very little volume, but it is a beautiful chart. And you can see that it did pull back here. It pulled back to the 50 after it went sideways, and it took off probably on an earnings report right here. And it's really never looked back since. Look at all the volume that started coming into it. Back over here, I'm sure this was not trading 250,000 shares. I don't backtest, Ivan. I think backtesting is a waste of time, personally. You're trading in the moment. You're not trading in the back. You're not trading behind you. I just think it's a total waste of time. But other people will disagree with me, and I know a lot of people spend time backtesting. You know, I came to that conclusion a long time ago. We cannot filter for moving average fans yet. That is something that I'd like Matt to do, but he just is buried right now. He's very busy, but eventually it'll get in there. So what I've done is I just kind of simulate. No, I flip through the charts, and I can tell immediately what the fans are looking like. But anyway, getting back to this is a stock that clearly went from a downtrend to going sideways, and then it broke out on the daily and the weekly chart. And now it's in phase 2, or the accumulation phase. Yes, it is extended, but watch it. The earnings growth has been good, little deceleration from last quarter to this quarter, but it may need to pull back here. But this is one that should be in a watch list. Look at the numbers here. Okay, the monthly looks great too. I'll do an alternate M. Well, you can see where this stock came out as the IPO, and it's starting a move up. Now, yes, it's overbought. You know, maybe it's got the right stuff to get back up there. I'm just not going to lose track of it, though. I'm going to keep it in a permanent watch list. But you can see the phase here, and I use the weekly charts to determine the phases. It really doesn't do much good to do it on a daily chart. Okay, so that's a good example of a stock that's gone through multiple phases, and now it's in the markup or the accumulation phase, whatever you want to call it, and the weekly chart is clearly in a long-term uptrend. Let's take a look at, well, here I'm going to show you a little stock that I'm in that had a really good day today. Let me see where it closed. HGSI, it closed at 8:30. So I'm going to hit my space bar, type in HGSI. I know it's a growth stock. It's down here. It's clear down at number 308. Why is it down at number 308? Because yesterday the pollution control group was down 0.69%, but this stock was up 5.6% today on 222% of average volume. Now this is a good example also of a stock which was really doing nothing. It tried to move back here. Notice how the moving average is tightened up here, and then it finally broke out on extremely heavy volume. Now the volume numbers are not all that great on this stock either. 382,000 shares. Now back here on a daily chart, I doubt if it was even 100,000 shares. Anyway, when you see a big volume spike like this coming in on a stock, on the daily chart or the weekly chart, it generally means that they're is some institutional interest coming in. Now, I don't know if that's true on a little inexpensive stock like this. Yeah, it is. 61.6% of this stock is held by institutions. See how much information you can get out of HGSI if you just look around. It's great. So that is institutional interest, at least it is now. PE is, I don't look at the PE too much, but it is only 22.4, and look at this. The return on equity is 20.51%. Got some short interest at 1.1 million, but the float is 34 million. Getting back up here, look at these growth numbers, though. This is what really attracted me to the stock, other than the fact that it was breaking out to new all-time high. This is all-time high today. But look over the last 3 quarters compared to these quarters back here. And this quarter on 3/15 was a 500% increase compared to the same quarter a year earlier. And then it was up. This one is up 50%, and it just continues to grow. I haven't forgotten about the ERG numbers. I look at those. It's not my primary prospecting method anymore. The EPS is 98, relative strength is 97. The group is 86 for an ERG of 281. Markets, markets have changed a lot in the last 20 years. The ERG method, it's great, for confirmation. We want to know what the group's doing, what the relative strength is, but the EPS, some of the strongest or highest relative strength stocks have a really bad EPS, so you have to be careful about that. But in this instance, everything was great. You can clearly see that this stock is now in a long-term uptrend based upon the weekly chart. And if I look over here, the crossover of the 3 and the 6 happened right here. There just happened to be a couple of VPA flags here. Here is the test for supply, and this is where I bought it right here, coming out of there. These green bars indicated a 2-day pullback from that high. I had a buy stop in, and that's where I got into the stock. It looked pretty bad today. It looked like I left my original stop in place because of this being a loose stock, and it looked today like it could fail, and some news must have come out on it, but it reversed intraday, and you can see the volume really coming into this. Now this magenta portion was a projection of the volume for the end of the day compared to the normal volume. I'm going to hit F5 here, see if that anything changes. Okay, so here's the actual volume now. Notice how that magenta changed to green because this is where the actual volume ended up. We had a huge volume spike today, but we also had a caution, a VPA caution flag, an upthrust, a sign of weakness. That's just because it closed off of its high a little bit. I'm not concerned about it. I have a stop in place. I moved my stop up. Is that what caused it, Sam? Sam says Zach's under $10 recommended a buy on it intraday, causing the pop. Well, thank you, Zach's. But yeah, it was down early, as you can see, and it looked really weak. So Zach's came out with a buy rating, and that's what helped it. But I was in it long before that. Well, not long before it, but quite a ways before it, because I just liked everything about it. The fundamentals, I liked the fact that it was moving up. It had moved up sharply on this volume spike right here, and then notice it pulled back. This is weekly. I'm looking at the weekly chart. Volume spike, it pulled back on a lot less volume, which tells you that there wasn't a lot of selling pressure. Okay? I mean, these are all the things that you really need to look at if you're doing looking at a chart through the lens of volume price analysis. And by the way, I think when Matt added that to the program, it was a tremendous thing. Not, of course, you know, you get VPA flags that don't work out, but boy, it certainly alerts us to things that that we may not see. Now let me just look at a few other things here. I want to point something out. This is a oh, here's the one I want right here. Now, one of the features that excuse me, I need to take a drink. One of the features that is available in HGSI now is the ability to filter for specific groups. It can be a smart group, it can be your own group. For example, if you start building a long watch list and you want to only look at that watch list, you can direct the filter towards that watch list. I didn't do that here. I am looking at growth stocks in smart groups. So I have two of them here. Growth stocks with the 2020 requirement in stocks and groups moving up, both the normal and the 1 to 15. So let's take a quick look at that filter. And here it is right here. It's the field name is group member. This is something Matt put in about, I don't know, 6-8 months ago, something like that. But you can select any group that you want, and it will go to that group only. Now, I chose stocks and groups moving to the upside because I wanted a quick screen of stocks that appeared in the smart group. I should turn off that. Oh, it's on manual. Okay. I didn't think I'd changed that, but I did. Okay, so what we have here are growth stocks in the stocks and groups moving to the upside. So out of the 100 stocks in yesterday's stocks and groups moving to the upside, you can see that 28 of them were growth stocks. So if you want to limit your trades, or your prospects, I should say, not your trades, to looking for stocks that are in that smart group and their growth stocks, here you go. That's all there is to it. Now here is a trade that I kicked myself for not taking. I just AMD has just done nothing for so long, as you can see over here on the weekly. But I wasn't looking at it through this lens. I was looking only at the daily chart. I didn't have this layout up. But look at this stock. Here is a stock that was really in distribution still. The moving averages are moving down. What happened? It broke past here on this heavy volume spike, so it went to here's a higher low, and this made it the higher high, and it has not looked back from making higher highs and higher lows. Now here there was a big sell-off. Earnings came out at 0, but it's a 100% increase, and after earnings, I think this was on earnings, but I'm not positive about that, it started moving up. Well, we get a better look at it over here on the daily. So here is the down week, the end of that. Look where the VPOC 1010 turned positive here. Now, the group was moving up at this point. here is an effort to rise, and I believe that I saw it on this day when it was just clearing this resistance area. And we never did get a pullback here, but look at this, it's moved up. Well, let's do a quick percentage. AA brings this chart up, or these tools up from this point to today's close. That's up another 41 cents is all. 4.71%. But I saw it and I didn't take it, even though it was giving me a VPA signal and the VPOC. Look how far the VPOC, or the candle, or the bar, I should say, is away from the VPOC line, which just confirms what's going on here. But here was the 3-6 crossover on that at that point. That was even before this. And then what do you see? You see volume coming in on these. And then today, let's see where the volume ended up. I'll do an F5 again since it's on manual. And volume staying above average. But now we have a shooting star. Certainly wouldn't take it now, but it would have been a good trade in the short term. Now, even though I went to this other group, because I have not changed my sort, let's make sure I haven't changed my sort. No, they're still all in place. Raw combo days since the last VPA signal and the last VPA signal description. So if you don't change that, if you don't go over and click on raw combo, that sort will stay in place. And notice how everything is grouped together here. Semiconductors have been extremely strong recently, but you can see that AMD was the only semiconductor out of this group that was up today. So they cooled off a little bit today, along with the banking stocks. But as of yesterday, these stocks were in the stocks and groups moving up, and you can see that they had signaled the VPA flags earlier. None crossed over yesterday. This one, IV, II, crossed over 5 days ago, or had a, no, that was a high volume down bar. That wasn't positive. Let's look at Silicon Labs here. 3 days ago. That was the last VPA before today, and then there was another one back here. But you can see that this group has been moving up nicely. Right here, this line, and the VPOC happened clear back here. So these two groups give you a quick way to look at stocks on the move in the groups, and then if you leave them up the following day, you can see which ones followed through. Now you can see that the exploration and production, I don't know what happened on this stock here. Well, it's a $1.35 stock, maybe that's why. But all the others followed through, and they were in this group yesterday. Let's look at the banks. You can see the banks all pulled back, but the banks have been coming up in this in the stocks and groups the upside a lot, and they have been excellent stocks to trade. Okay, so these are all things that you should be looking at if you like growth stocks. Put these charts up here, start playing with them, and look for your own prospects. And then I'll be sending out, I don't know how many I'm going to send out. When I find something I really like, and it doesn't mean you should take the trade, that's your responsibility. But I just want to treat this as a learning experience. What I'm looking at, I'm going to learn from it too, because it really forces me to stare at these stocks and to evaluate them. So I'm actually looking forward to it. Let's look at one more stock that came up today. Somebody mentioned it, ANET. And this is a stock, I just want to point this out because this is a good example. This weekly chart is very loose and very ugly, but it's had some nice runs. Here is a low volume test for supply right here on a green bar. Your entry point would have been above this high, or if you're a little braver, it would have been above that high right there, but more than likely here. Here's another one. It would have to be above that, so you wouldn't have gotten filled if you'd left it in until this day, but this stock was up a lot. Look at this, where the VPOC 1010 went positive. There was a reversal day right here, but I attribute most of this move until today to this group line. These are things that you really need to be looking for. You need to scan. If you use this sort that I'm using, this is going to give you the groups first, the ones that are moving up. It's going to give you the days since the VPA signal. Let me bring that up again. Days since the last VPA signal. I see that I need to make a change. No, this is correct. Okay. So on the, I need to get up. I'm down at the bottom of this. I need to get up here near the top. Okay. So like here's internet-based services here. Raw combo rank, it put the groups together. You like to see the wolf packs together. You like to see how much they moved. Then you want to see the days since the last VPA signal. If it's a 0, that means that the signal was generated when you update that day. And then the description. If there are several that have the same description, they're going to be grouped together. And I'm looking for some. The banks, I pointed that out earlier. You can see right here, there's 3 efforts to rise in the banking. Do that again. Okay. 3 efforts to rise in the banking. And the VPOC, this is the days since the VPOC went positive. You can see that these are not fresh trades for the most part. 2 of them are 10 days old. And 1 of them was 2 days old. But they did not follow through today. Still, that does not mean that they're finished. Let's just take a look at First Bancorp. This is one that I did have in my watch list, but obviously I didn't. What am I doing wrong here? There we go. It was in my watch list because of right here, the pullback and then the move up. Now, if I'd have taken the trade yesterday when I should have, I'd have been in at this point, be a little bit behind on it. This is an inexpensive stock. Banks are a little bit extended, but boy, with the group line going up like that, and then you can see that it started forming higher lows and higher highs here. It is showing signs of accumulation. It's come from down here in the $2 range, $2.50 range, all the way up to, well, the close today was, let's see where it did close. Once again, I have to do a manual update on this. I do the manual update because it slows me down. Okay, it traded a little lower, got some buying at the end of the day. But you can see what kind of move this has made just recently. and here's where the VPOC turned positive. So you can not only scan on the days since the VPA signal, you can scan, you can change that to days since the VPOC crossover, ascending. You want the smaller numbers at the top, and then you can see that exploration and production, this one is not signal, but these two have zeros beside them, so that tells me that these two had a positive crossover on the VPOC yesterday. And if we look at the chart, that is confirmed because this would have been it yesterday. Now, once again, this is a gap up. You don't want to chase those gaps because you certainly don't know how they're going to end up. Anyway, you have all kinds of options here for sorting, and when I put a stock up there on the OneNote and send you the link, I'll send to the subscribers the links. I will tell you the sort that I'm using. It'll be part of the OneNote. Okay. Well, I pretty much covered it. I hope you like this direction because I just think it's going to be a lot more educational, and I think it could be. Okay, Steve says there is a 15% discount for TJS Elite using the promo code TJS Holiday 2012, not 2016. Can you see this? Right here. So if you want to buy that spreadsheet, you can get a discount on it. Okay. Okay, thanks, Steve. I appreciate that. So that's a pretty good discount, 15%. All right, does anybody have any questions? Either you're asleep or I did a decent job of explaining what I'm trying to do here. Okay, well, I think I'll just shut it down. It's been about an hour and 10 minutes. Okay, thank you.